Hello and welcome back, everyone. We are creating a new series about how to improve as a trader. If you have decided to pursue as a trader, this series will help you. It will have a lot of general content that almost every trader or every aspiring trader can apply. So let's start with one of the very important question before you start trading is to know yourself. And in this know yourself, in this theme, we will first address today the issue of time frame. All right. So let's go ahead. As Aristotle said, knowing yourself is beginning of all the wisdom. So before you start trading, what is important is to know your time frame. And your time frame can be years, months, weeks, days, hours, minutes, even seconds. Now, in which time frame do you want to trade? And this, when I'm saying years, months, weeks, I'm not talking about your chart. You want to trade on a yearly chart or a monthly chart or hourly chart. No, I'm talking about the time frame within which you will be holding your trades. So let's go ahead. If you decide that you want to hold your trades for years or months, so it's like you take a position today and you will wait for few months, 6 months, 1 year, 2 year kind of trades. If this is what you want, so this is very suitable for those who want to do trading part time. This with this type of holding period will mostly come under trend following. Those who are practicing trend following will usually have a very longer holding period if the trend continues, and it is comparatively safer. Why I'm saying comparatively safer is because mostly this type of trading can be done in cash, so there won't be a lot of leverage. So even if you go wrong, you would be losing a percentage of your capital and not blowing up your entire account. So this is comparatively easier. It is boring. Well, it is boring because you take a position today and for next 6 months you don't know what's happening to your position. Like you can see your P&L fluctuate every day, but you don't know what is the final answer. Like finally you're making money or you're gonna not make money. So it requires a lot of patience and it is not exciting like trading intraday bank nifty options. No, it's not like that. Your money is not gonna double in a few minutes, and neither it's gonna become zero in few minutes. So this is a comparatively safer option for those who want to just invest kind of instead of SIP. If you decide to trade, if you decide to enter and exit the stocks based, you decide to time the stocks, then this is an approach that you can follow. It would require a very few amount of effort, very less amount of effort from your side. A few hours per month would be enough. Similar to this is the one that time frame one where your time frame is weeks or days, where your trade will last for few weeks or few days. Now in this, there could be positional trading, there could be swing trading, one where you are buying the pullbacks, one you are buying the breakout. See, the type method of trading is not what we are discussing over here. We are discussing on what type of time frame is suitable for whom. This time frame is suitable for swing traders and positional traders both. It is suitable for part-time traders. If you are a part-time trader, you would take a trade and your trade would last for months, sorry, for days and weeks. You can follow this type of approach also, comparatively short-term approach than previous one. You will have to put in a couple of hours every week if you are trying to do this. If you want to do on a daily time frame, then you would require to put in at least 40-50 minutes every day. It is a bit more riskier because the shorter the time frame you go, there is a higher chance of I won't say there is a higher probability of hitting stop losses. It's just that you are capturing a shorter trend, so there is a higher chance of whipsaw, that you might get a breakout and it turns out to be a failure, things like that. It is a little higher risky, but if you do it in the cash segment, it would be very much comparable to the trades that you would be taking on the week or monthly or yearly basis. So if you are doing it in cash, it's not more riskier. It is more riskier if you are doing it in derivatives. If you think like, okay, I'm taking this stock, I'm going to hold it for 3 days, so let's me take a stock future instead of stock or stock option. So this is where it starts getting a bit riskier. Then there is everyone's favorite, intraday trading. It is the riskiest trading because it has got very high amount of leverage. People don't do this in cash. It is not recommended to be done in cash. Cash, a very few stocks would have that much of liquidity that you can trade every day. So mostly what people do is they trade in options, they do option buying, they trade in futures, and this is where it becomes very, very risky. So this is the riskiest thing. You will require homework every day, you would require screen time every day. If you cannot do these things, stay away from intraday trading. Clearly stay away from intraday trading. And also you have a strong competition from algos and machines. This is a time frame where they operate. There are machines, there are algos that trade within seconds, that they are so fast that they would buy a lot of quantity and they would sell a lot of quantity for 1 2 rupee. We cannot do that. We don't have, our brokerage will eat everything. Neither are we that fast to enter and exit so fast. So better leave this domain to the algos and machines. Focus on the larger time frame. If you want to do trading as a part time, if you want to do trading as a part time and then you decide that you want to do intraday trading, then you are actually, this is a recipe for disaster. And even if you, like, if you are hell bent on doing intraday trading, then well, you can do one thing. You can decide a time slot that, okay, market opens at 9:15, I will trade from 9:15 to 9:15 to what, 10:15 maybe. I'll put my trades, I'll put my orders, I will close my screen at 10:15, and that's done. That could be done, though it would be difficult. It can be done, but yeah, this is the riskiest time frame if you decide. So that is it about the time frames. If you still have got questions, subscribe to our YouTube channel. We would be posting more and more learning content. Leave your comments, feedback in your questions, for us, so that we know what more videos to make. What are your questions? What do you want to know more? So please leave your questions, feedbacks. You can connect to us on Twitter, Instagram, etc., where you can ask your doubts, DM, and we'll be sharing links with you. There is different things on different platforms. On Telegram we share intraday levels for those who are interested in intraday. On Twitter we do share our weekly trades, which we also share over here. So do connect with us on other platforms as well, and thank you for your time.